Good afternoon. It is exactly noon on Monday, May 15th, 2023. Um, some comments about the S&P, the bigger picture chart structure, the daily chart, this megaphone pattern that I've drawn here. And this is a unique situation we're in right now. This doesn't happen that often where volatility drops as much as it has in the last couple of months. Remember, it was just 2 months ago, over here, mid March, that we were in a quote unquote banking crisis. And there were headlines every weekend about bank failures. And one of the largest banks in the world, in Switzerland, CS, um, basically got forcibly taken over by UBS because it would have failed otherwise. So we were having bank runs just 2 months ago. Bank runs usually mean a lot of volatility. And look at where we are today. So not only have the major averages, risen back to where they were before the quote unquote banking crisis, but also we're hardly moving, right? This 4140, 4150 level on the S&P, we're just gyrating here, and the megaphone pattern is not resolved. So I want to talk a little bit about Dow theory. Also note, look at the volume today on the SPY. I mean, we're not quite halfway through the trading session, but still, this is very light volume. We're not even at 20 million shares on the SPY, and it's noon. That's that's Christmas trading. That's Thanksgiving trading. This is pretty incredible. And so I have a theory about this environment, why it's so range bound, why volume and volatility have dropped off. And that is that there's no clear signals anywhere, right? So if we just use Dow theory, just this paragraph here, that in order for a primary trend buy or sell signal to be valid, both the industrial average and the rail average, so the industrials or the transports, must confirm each other. If one average records a new high or new low, then the other must soon follow for the signal, the Dow theory signal, to be considered valid, right? And they're giving an example here of confirmation of a new signal. Now, the Dow theory is a bit outdated, I guess. I think it's still relevant to some extent, but you can utilize the concept of confirming signals in many other ways besides just Dow theory, the transports and the industrials. But let's just look at the Dow theory for the sake of simplicity. So this is the Dow industrials, and there's no signal here. There's flat 5,200 moving averages. There's no new high or new low. And if I'm to draw like a trend line, it's going to be something like this, or I could just draw it horizontal and say, okay, it's got to break these levels. But either way, it's not breaking out, right? It's also not breaking down. And the transports, well, there's nothing here, absolutely nothing. And if I were to draw something, it'd be a downtrend like this. So we would need to thrust above this trend line, this downtrend line, or maybe break under this level to call it a new low, right? A new low for 2023. So either way, none of these charts are showing any resolution. The financials, the XLF. Well, this is interesting because this is the weekly chart. And this is a classic. I call this the 5,200 squeeze. You have the 200 still upward sloping, prices above the 200 week, but now the 50 week is downward sloping. and price is under the 50 week. So it's a 5,200 squeeze because we're in the middle and we don't know which way this is going to resolve. So just like the industrials, just like the transports, we're in the middle. There's nothing here. I mean, this looks like a crash followed by a bear market rally, and now we're beginning to roll over again, right? I mean, that's what it looks like. That would be my sort of obvious first level thinking interpretation of this chart. And if we're just simply thinking about trend following, well, the 50-day moving average is clearly downward sloping and price is under the 50-day. So we're in a downtrend. So, if we look at the accumulation of evidence, we have thinning participation, falling volume, bad market breadth. So, the number of sectors participating in the uptrend, quote unquote, is increasingly small. It's thinning out. The leadership is among the mega cap NASDAQ names: Amazon, Apple, Meta, right? Google. That's your leadership in this market. Uh, Prior to last week, gold miners were another leading sector. That's absolutely not a sign of a healthy market environment. Gold miners leading, no, that's not a bull market, folks. Sorry. um, you want your leadership from financials, transports, and industrials. I mean, that's like as American as apple pie, right? In the stock market, you want your leadership from transports, industrials, and financial stocks. That's your bread and butter in the stock market. And any technician, any veteran market observer knows that. You do not want leadership from Walmart, Coca-Cola, Newmont Mining, right? Those are defensive stocks that people get into when they're risk averse or they're more adverse to taking risk, right? This is not a risk on environment, quite clearly. And there's no clear signals. There's no clear technical signal. Okay. And I would assert actually that this market, the last couple of months, has torn pretty much everyone to pieces who's participated in it. This has not been a profitable 2 months for 98% of market participants. Even people who aren't quote unquote traders, I don't think are doing well in this environment. Swing traders, not doing well. Day traders, definitely not doing well. And even investors, I think a lot of people got flushed out in March and they're just not in the market, or they're in less than they were previously. And so yeah, there's no clear signal here. Okay, so this is the summary of the video. There's no clear or even murky signal. There's just nothing. There's just nothing out there. And I think that's why we're seeing the volume and volatility trail off, because people are just uninterested. There's nothing to really trade on. Now, I think this will resolve in the next couple of weeks, 2 to 3 weeks probably. And I'm going to do my best to sort of just draw this. Some people are interpreting this as a diamond pattern. Okay, the SPY looks a little different than the E-mini, obviously, because they trade different hours. The E-mini has more price action on it. But you get the picture here, okay? It's not perfectly drawn, but a lot of people looking at this as a diamond pattern. Okay, which megaphone, diamond, call it what you will. But we're in a 6-week, 7-week range. And this is going to resolve here. I would say by the end of May, it's going to resolve. And when it resolves, it's probably going to lead to a very big move, just because so much energy has been built up in this range. So much energy since the end of March has been expended in an increasingly narrow trading range. So when the energy gets released, right, either the people who are long now get stopped out and then flip short, or the people who are short now or in cash now then buy into the market on a breakout above this range. Either way, there's a lot of pent up energy here. It's unclear whether that energy is on the buy side or the sell side. And I know that's not very helpful, but that's the reality of it. And nobody has a crystal ball, including me. Gold. So this is just a very simple line chart, 20-year monthly line chart. And this is just to illustrate that we don't need to overcomplicate this. Yeah, there could definitely be volatility here in the near term. The near term being weeks, right? 3, 4 weeks. Absolutely. Gold could get slammed down to 1950 or something in the near term. I actually don't know whether to think this debt ceiling thing in the US is bullish or bearish for gold in the near term. Obviously, longer term, it's extremely bullish. But what if the politicians don't come to an agreement in the next couple of weeks and we get to early June and the Treasury is saying we're almost out of money, we're going to have to shut down the government? Is that really going to make gold rally? Or is that going to cause a major financial market squeeze that will actually cause gold to get sold off in the near term to meet margin calls, right? It's not clear. And anybody who thinks that they know exactly how gold is going to trade on this debt ceiling thing, I think they're fooling themselves, right? So in the short term, a lot of weird things could happen. But bigger picture, gold is sending a message here. I mean, frankly, gold has had some reasons, some excuses to sell off harder in the last month or so, right? Like the banking crisis evidently has abated. Fed continues to hike, and there's speculation they may have to hike more. That's not great for gold. Okay. The rising price of money, tightening financial conditions is not bullish for gold, at least not in the near term. Bigger picture, they're going to have to unwind this and they're going to have to ease again, but that could be 6 months from now, right? So gold is sniffing some things out that I don't even know is really in the headlines, right? This is just very bullish action. But look at the technical indicators, the ADX and the RSI. So these are not at levels that are characteristic of a breakout market yet, right? Like look at the gold bull market 2002 to 2011. Look at where the ADX got, the RSI got in 2007 and 2011, right? We're nowhere near those levels. So price is at a new all-time high essentially, right? We're above $2,000 an ounce. Certainly a monthly closing all-time high if we ended May here. um, but the technical indicators, the momentum indicators are not screaming this is a bull market yet, right? They're only on the monthly time frame. The ADX will only get above 40 when gold is much higher, right? Gold's going to be 2,200 or 2,300 by the time the ADX on the monthly gets above 40. RSI, getting really overbought above 80 or something. And notice that you want the RSI to get above 80, right? Look at where it got during this in the midst of the strongest uptrends. Yeah, eventually it's going to get too overbought and too overextended to the upside, but we're nowhere near that right now on the monthly chart of gold. So this is what's really exciting about this setup is that um, gold does not appear to me to be a crowded trade, for sure not in the grand scheme of the broader market. 98% of hedge funds and market participants have zero gold exposure here, right? So it's nowhere near being a crowded trade yet. The price is telling you something, it's telling me something. It's bullish. And the potential upside here, and again, I'm not talking about this week. I'm talking like, looking out 6 to 9 months, but the potential upside here is substantial. I mean, I really don't think if we're talking 6 to 9 months out, I don't think $2,500 is an unreasonable target for where gold could be, at the end of this year or early in 2024. So a challenging market, a murky market, a market with very few signals and a lot of noise. If I could describe it in a sentence, I would say this market is a market that's abundant in noise and very scarce in signal. Thanks for watching this video. Have a great day.